So good morning. Melinda Nash, IntegriLend Loan Solutions. This morning I'm talking to you about the First Homeowners Grant as well as other grants that people can use at the moment to hopefully that they can hope to get into the property market. So as you are most likely aware, the Australian government announced their economic responses to the coronavirus, and one of those is the HomeBuilder grant down here. That's what I'm going to focus on primarily this morning. So the HomeBuilder grant is, it's a $25,000 non-taxed grant which is available to owner-occupiers for new home builds and also for substantial renovations. They are putting a proviso on the grant that it must improve the accessibility, livability and safety of the property. If anyone knows what that means, I do not know, it's just ridiculous, but it apparently just means that you can't build a tennis court or a pool or a shed or a granny flat. It also can't be used for investment purposes. So there are a number of conditions. So the first ones are about you. So it's only available to Australian citizens. There are income caps as well. So 125,000 for singles, 200 for couples, and that's based on your 2019 tax return. But you can also do this in conjunction with the First Homeowners Grant and also the First Home Loan Deposit Scheme. So the conditions for the actual project are that the property value that you're building, if you're building a new home, can't exceed $750,000. And if you're looking at a renovation, the property value prior to the work can't exceed $1.5 million. In relation to renovation contracts, they have to be between a minimum, or actually interestingly, the building contract or the value of the renovation has to be between 150 and 750,000, but we've had no clarity in relation to what that means. So because a building contract and the value of the renovation, of course, can be two totally different things. It has to be an arm's length transaction, so no owner builders. The timing of it, so there is no limit to the number of grants that the government will approve, but the contracts have to be signed between the 4th of June, which is of course over a month ago now, and the 31st of December. And the construction has to commence within 3 months of signing that contract. The payments will be made to the property owner, and the indications are that that payment will be made after $150,000 has been spent on the project. So what we know is that last week the Victorian government signed up to the Commonwealth program. It's going to be implemented by the State Revenue Office, but the State Revenue Office knows nothing about it and can't give you any guidance whatsoever. Not at all. They know no more than the 2 fact sheets that have been released by the government, but you can sign up to receive email updates by emailing homebuilder@treasury.gov.au, but there's really been nothing useful coming from that so far. But the banks will be able to apply for the State Revenue to the State Revenue Office on your behalf for the Builders Grant, as they do now for the First Homeowners Grant. But again, no information from the State Revenue Office about that either. So the questions that we need answers to are, can setup costs be included in the cost? Because a lot of people can spend, you know, tens of thousands of dollars on architects' fees, engineering, permits, all of that sort of stuff. And we don't know yet whether that can be included in the 150,000. We also don't know what the effect of prime cost items are on those minimum levels as well. So normally, you know, in a contract, there's often a lot of prime cost items, which are, you know, likely a gas log fire or an oven, and often those prime cost items may come in more expensive or less expensive. So we don't know what the eventual cost will be, and we also don't know when the State Revenue Office is going to start taking applications. So now just going to give you a couple of case studies to put some real people into these numbers. So the first one is in relation to a house and land package for a first home buyer. So let's say that they're looking at buying a house and land package worth $500,000. I won't read off all of these numbers, but just to give you an idea that somebody who doesn't qualify for the First Home Loan Deposit Scheme, because that's capped, they would only need about $31,000 worth of savings to action this. And if they would also, after they've spent the approximate 300 on the, or half of that on the build, they will get a refund of of 25,000 on the build project. However, if somebody does qualify for the first home loan deposit scheme, which basically means that the government is paying your lender's mortgage insurance, they only need just over 16,000 in savings. So a lot of people who are renting might not be aware that that's sort of the minimum, so long as their income services the transaction, that's sort of the minimum to get into the market on a purchase of that size. However, there is also the option with first home buyers of a family pledge. So if a first home buyer, for example, has a parent who has a property that has equity in it and they're prepared to offer that property for security, they can actually get into the market with no savings at all. And they can also borrow up to 110% of the value of the purchase price of the property. So they can actually have cash available for things like home improvements or moving costs or things like that before they for that move. So they would have two loan splits. So one would be secured by the home that they're purchasing, and the second one would be secured by the parent's home, and the parent's title being returned when the value of that property grows and the loan reduces to the point that it's 80%. In relation to renovations, so let's say that a homeowner applies for a construction loan of at least 150,000. The sort of documentary evidence that they might have to come up with would include their ID, income evidence, plans, permits, fixed price building contract, and after drawdowns of at least 150,000, the home builder's grant would be paid to the homeowner so long as they meet those predefined conditions. So one of the advantages of coming to IntegriLend is that these are the lenders that are the residential lenders that are on my panel. So you'll find that the policies of each of these banks vary enormously. So, you know, if you don't use a broker or IntegriLend and you walk into your local branch, for example, they decline your loan, then that doesn't mean that it's not possible for you. So if you come to IntegriLend, I can check the policies of all of these banks and place the loan with the most appropriate lender given your circumstances and your serviceability. So I'm just going to stop my share just a quick sec and show you something else. All right, I'm just going to show you a quick glance at a servicing calculator to show you the effect of various debts on your serviceability. So I've just plugged in a household of a couple with 3 children, what their household incomes might be. This is just a CBA servicing calculator. I've also added in a few credit cards and a car lease and a personal loan. And this particular couple have a maximum borrowing capacity of around about 600,000. So if we take out some of these, and just to show you, when you're thinking about borrowing, you don't want to have any of these, or as little as possible. So if we just go back to the bottom, oh, there, it's playing up on me. I did this yesterday, it's fine. Oh, sorry. Okay, this worked perfectly yesterday, so I'm sorry, everyone. But basically, you will find that your borrowing capacity, although sorry, I've messed this up, but it will jump up by about 200,000 if you remove these aspects out of your arsenal. Sorry about that. Now it's not working. Oh, there we go. Also, my software will differentiate between the various products. So you can see when we're comparing loan products, we have to look at the principal, the interest and the fees. Because you can see here, the cheapest product here actually has quite high fees, whereas the ME Bank product, which has 200 and which is different by a lot more expensive, actually has much reduced fees. So it's important that we compare all loan products of taking into account all of those factors.
1 minute.
I've also just, what was that, Paul?
1 minute.
Oh, okay, super quick. I've also just quickly grabbed some of the cheapest offers on the market to share with you very quickly, because a lot of people are interested in rates. So the owner-occupied cheapest rate at the moment is ING. This is a variable rate, 2.59, but it drops down to 2.19 if you're looking at fixed rates, and investment variable rate 2.89, dropping down to 2.39 if you're looking at fixed rates as well. So in terms of referrals, my dream referral would be a professional who can provide a constant source of clients. And cream referrals, so high wealth individuals needing a mortgage health check who are looking to save on their mortgage costs, because they can save a fortune. And for bread and butter referrals, so a couple with young children who are renting and are dreaming of owning their first homes, who might be eligible for the first homeowners grant, the first home loan deposit scheme, and the home builder grant. And for sourcing properties like that, they might like to talk to somebody like Matt. I know he often has some deals that could help with that. So yeah, that's it. Thank you.